So Amrit represents the private life insurance market, and life insurance is now 25 years old in India. It's been 25 years since private insurance got into the market. Um, Now, in these 25 years, in your view, what's been the most defining shifts that you've seen in the way private life insurance has managed in the Indian market?
Thanks, Roshun, for having me. I don't know if I can speak for 25 years, but I can definitely speak for the 12, 13 years that I've been associated with the sector. And I think let me try to break these shifts that we are seeing. And, given the way our sector is, the shifts are gradual, they are regulatory driven as well. But let me just break the shifts into things that we see from consumers' trends perspective, and some important discussion happened in the previous panel as well. Shifts that we are seeing in our distribution models, and shift that we are seeing in general operations and how do you run the business. I think on the consumers, very frankly, if you just step back and think that what is the role a life insurance company does in the betterment of the society. And at least at Axis Max Life, we take a lot of pride in the purpose that we have built around some of those themes. In our minds, actually, there are two events which in a family's household can put you into an abject poverty. It's a death of a breadwinner, or it's a disease which can suck all your financial resources. So I think the question is that as a life insurance sector, how much of this we are addressing? And what we have seen that from just only being a savings-led narrative, which is also important because the industry inculcates a disciplined habit for a long-term goal. We have seen strong improvements and growth happening on this risk coverage, which is risk of dying young, or the mortality morbidity element, which is the growth of plain vanilla term insurance policies. We definitely see now, from a trend perspective, even the need for retirement getting, amplified. I think those conversations around 80C for coverage, etc., is no longer a conversation which at least the consumers are doing at our ends. They're trying to solve for the fundamental gaps in solutions. I think the other thing, on the other aspect that we've seen is on channels, fair bit of digitization. You will be surprised that 6 years back, less than 5% customers used to come through digital doors to our company. Now over 30% customers come through digital doors. I'm talking about customers, actually. And lastly, on data analytics, I think there was a lovely session by ID5 which talked about the prowess of using technology and leveraging it for the right opportunities. That is becoming very, very integral. And we just see some of these amplifications from a goal perspective going forward as well.
Okay. Yeah, and you rightly said 80C is no longer the incentive because even after the tax structure has been changed, when you look at the new tax regime, 80C, 80D doesn't matter anymore to people. So I don't think that's an incentive anymore, right?
I mean, there are enough and more avenues for them to fulfill. I'll just say that I think, at least in my period that I've seen, I've also seen the fundamental product structure improvement. There was a comment made that, don't only do protection and don't do savings and there are better vehicles available. I have a contrary view to that because we are the only ones who can give a customer a peace of mind with a long-term guarantee. No one can give you a guarantee of 30 years, 40 years that we can give it to you. So as part of your portfolio strategy, you'll need to have some of those things as well. Even the fundamental products like ULIPs, from a charge structure perspective, can give a mutual fund also a tight competition. If you are persistent, have a long goal, and you remain invested, I think the proposition, the product category has a solution to offer. And 80C, 10 years back, people used to talk about it. When we now generally ask consumers the reason for buying, it is more the fundamental nature of the product than anything else.
Okay. And are you seeing this with the younger age group as well, at 20 to 30? Are they looking at term insurance or are they only looking at investment?
I think there is always a tipping point that once, and we in our industry say that once you have had a first child, that's when suddenly a lot of responsibility is felt emotionally on the individual, and the term insurance becomes an important proposition. The youngster still likes to do consumption, though I must say, we have on our digital channel generally attract younger people. And if you can, I think the question is around awareness and literacy, and if you can express that clearly to them, there is a reasonable take rate. But yeah, I mean, still it's a 35-year phenomenon, not a 25-year phenomenon.
Okay. Yeah, so digital technology definitely helps, and as Sanjay was also mentioning in the morning, and the chairman also mentioned, easy access to technology makes things fast. But that said, India structurally, Indian households still remain underinsured. Right? From a financial resilience standpoint, how serious is this protection gap that we are seeing, and what risks does it pose for the long term?
I'll give you and I can, we can do a quick exercise here also. Whenever I meet teams, and I think we are all privileged, lot of people sitting in this room than the 140 crore Indians. And I will do a raise of hands that how many of you have an adequate term insurance. The general answer is 20-30% people only raise their hands.
We can try it here also.
Yeah, we can try it here also.
How many people have
Whoever
adequate term
who
insurance?
thinks they have an adequate...
Raise your hands.
So I was saying in a more evolved room actually, yeah. So this protection gap, the figures that the reinsurers kind of Swissre quote, they are very large figures. They'll say India has 85% protection gap. And even when you see some of those metrics like which are talked about, sum assured to GDP ratio, we are sitting at 24. And I'm using sum assured ratio, not premiums, which you heard since morning, because that's a fundamental nature of what the protection is all about. So that's around 24% for India. The best country would be Singapore. Wrong example, possibly sitting at 300%, but even Thailand is sitting at 160%. So the sum assured gap is a large gap in the country. We do internal numbers and we kind of think that, okay, if 140 crore Indians and the real buyers, let's say 10 to 15 crore Indians, how many of them have so far taken a term insurance policy? That number was also surprisingly a 12% number only. I'll just kind of augment on this particular topic. We have, and this is available on our websites, this is the 7th year of doing it. We have an India Protection Question Survey that we run. Every year we run this survey. What we have seen there in that survey is that the awareness of this product has definitely increased. People are aware. From the lows of 30-ish awareness, that number is touching 70. But the ownership has moved from 20 to 30. So there is still a lot of headroom available, at least solving for this particular gap.
Okay. And the other thing is, India, we still say India is a young country, we have a young population, but it's also true that we are also aging faster. Life expectancy, as even the chairman mentioned in the morning, has increased in India. So how do you see this demographic shift shaping up in retirement planning for the next decade?
I generally, again, on very loose caveat I give, I think this is the first generation of large private people retiring. So far, either you were in a government job or you had your own businesses. Government took care of you. This is the first time a large generation is retiring. And we again have a study here also because these two topics are very dear to our heart, called the India Retirement Survey. In that survey, the adequacy levels, are quite reflective. People themselves say that 60% people feel that if they retire, they will run out of money in 7-8 years. Only very few percentage feels that they will be able to survive. But good news is that many people are saying that they should start early. They should start not at the age of 45 thinking about retirement, but possibly thinking at 35 about retirement. And we have this question that to your younger self, what will be your advice? Generally, that advice is have a corpus created around it. We are seeing that at least in our business. So rather than ATC as a reason, retirement planning has become one of the top reasons along children's education and themes like that.
Yeah, especially since you have at least a good 15 to 20 years after your retirement age. Now we are seeing that people need that kind of income generation. Yeah. So that's it. If you look on a macroeconomic perspective, with formalization of the economy, rising income, improved financial literacy also there in the country, how do you see India's, I would say maybe the next 10 years, the biggest opportunity to close the gap between retirement and protection gaps?
These are, our license is so unique, which the regulator has blessed us with, that we can participate in the discipline savings market, the mortality morbidity market, and the longevity market. This mortality morbidity longevity market is I mean, I think it's sitting there to be capitalized upon. It will depend upon financial literacy, financial awareness. It will depend upon, as the affluence of the country keeps rising, the importance of life insurance will become very important and very critical. At least as a life insurance company ourselves, I mean, we're happy to say this, we are leading that mantle. We have the highest amount of term insurance written in the country. And I'm kind of even putting the public company into the list of comparison. We have the highest protection penetration in our business. So we are, very excited about these two opportunities for sure.
Okay. And one more question I have is on the use of data, because now you have easy access to data, and we saw in the earlier presentation and of that, with so much of digitization happening, and you also mentioned that now you have a large percentage coming in directly through the digital route on insurance. With this digitization of data, what kind of insights do you have now when it comes to selling your life insurance products? What are the roles that digitization can play?
So
here?
I think ID5 team mentioned about the signals that you can receive with the augmentation of ecosystem data. This actually helps you underwrite better. At least in our value chain, in addition to the standard credit bureau scores, we will also augment it with other dimensions of signals that will come to you, which has whether the seller behavior in that geography, in that pin code, in that area, to identify potential fraudulent elements which can come your way, and hence try to control some of those elements from an entry perspective. Even in the underwriting side of business, where you underwrite the risk, and we generally conduct medicals on such policies. It is important, like the hospital example which was being given, the diagnostic center is genuine or not, and the diagnostic report is genuine or not. So how do you bring analytics on top of it and identify signals to ensure that you're not getting into a fraudulent element? Our intention is to pay. Our intention is not to pay, but our intention, while wanting to pay, is to ensure that fraudulent elements don't enter into the business. So it's a journey. I think Chairman Sir also spoke about the fact that the first foundation is of ensuring you have the data created as an infrastructure. And once you can see all the data, you can build upon that data elements as time goes by.
And I also need to ask you about, how much of AI do you use in Access Max as well?
We use a lot of, actually. We have across different dimensions. So if you write to our help desk, it is 30% of the queries are responded by not the regular chatbot, but a language learning model chatbot, which actually understands intent and tries to solve for intent. If you talk to our agents, they have a assistant to them where they can just ask any question, and to that question, that assistant will answer in the language of their choice. And it is not like, it's no longer about just pressing those buttons and menu options, but more speaking in natural language. We have, for our advisors, actually, even when they want to enrich themselves from a training perspective, role play capabilities available, that you can role play with a machine, and the machine can kind of just, give you that experience of a real environment. And similarly, the moment you start coming towards issuance and all of those elements, policy issuance, underwriting, there is enough and more put. Even for employees, by the way, to ensure that we know employees are motivated, we have a chatbot which talks to you, and if basis the signal and your responses, it actually identifies a trigger to the supervisor that there could be a potential risk of disengagement. So we're on that journey, but it's an exciting time for all of us.
Great. And so on that note, I'd like to thank you also for taking this time out for joining me.
Thank you. Thank you for having me.
Sharing your insights on
Thank
Access
you.
Max. Thank you so much.